And it's going to be Ted Seifried, Zaner Ag Hedge. And Ted, thanks for being on the show all the way from sunny Chicago. All right. And what jumps out of you there?
Yeah, it's pre-report trade, Scott, in a shortened holiday week, too. There's not a whole lot going on. Yeah, you mentioned corn down a little bit. Doesn't seem like a whole lot, but it's significant because once again, we tried the 50-day moving average, and once again, we failed. I think we're kind of setting ourselves up for we need to see something friendly in this report on Thursday, or reports, I should say. It's two separate reports, but we need something friendly. Otherwise, I think we're looking at a potential failure here at the 50-day moving average. And that was our sort of springtime bear market bounce, right? That's the concern I have. And when I look at the average trade estimates for both quarterly grain stocks, although I won't go too far into that, that's whatever. But when I look at acreage at 91.8 million acres, I don't know. I think those trade estimates more closely reflect what the talk was back in the fall than what they are now. Yes, I get it. The corn bean ratio is leaning towards beans at about a 2.5. But also, really, Scott, I mean, everybody I'm talking to is kind of looking at the lower prices that we have on the board today versus where we have been the last couple of years and figuring, hey, we just need more corn bushels. That's the fear I have. I'm worried that corn number comes in higher. I think the bean number could come in a little bit lower than the trade expectations of that 86.5. But I don't know if the bean number is going to be bullish enough to really pull everything up and over. But we'll see. That's why we do these things, Scott. That's why we have these reports. But I am here to say that I think we need something pretty darn bullish in one of the numbers on one of the reports to really get things up and over these key resistance levels that we're really just banging our head against right now.
Yeah, I hear you, and you're not the only one talking like that, too. All right, stay there. We're going to go away. We're going to pay some bills. Let's bring back in Ted Seifried, Zaner Ag Hedge. Ted, any thoughts there?
Well, Scott, we've been talking about it for weeks that I kind of felt like we could see a deeper correction in the cattle complex. And, here we are. I think that's triggered by the cattle on feed report that we saw last Friday, that placements number in particular coming in well above expectations and a big jump year over year. I don't think the near-term fundamentals have changed dramatically. So to me, I see this as a correction after a long period of time of not being able to advance higher, right? We consolidated at the highs for quite a long time, kind of similar to what we just talked about with corn and that 50-day moving average. Eventually, if you can't get through it, you're going to break. And that was the catalyst to do it. Yesterday we were down a little bit, but then we broke through some major resistance points. And then that gives you this sort of technical flush out, especially with the funds having been as long as they have been. There's some scrambling for the doors, it seems like. Now, the interesting thing is that we are, if you look at August fat cattle, which that's where the volume is at this point, we're looking like we're going to close right on top of our 200-day moving average, which is a very key number and a key target for a correction. So right. I'm not saying this is done with, but it's interesting how these technicals all kind of sort of come together. And again, we're targeting that 200-day moving average. You could say the feeder cattle are doing the same. So I'm interested to see what tomorrow looks like. But this is the correction we're talking about.
All right, brother. Awesome stuff. Great to bring the technicals in there. Really appreciate it. Ted Seifried, Zaner Ag Hedge. He's in Chicago. We'll bring it back here to Nashville and hand it back over to Suzanne just one more time.
Thank you so much, Scott.